There's a great opportunity to sell the Great British Pound versus the Swiss franc, that's GBPCHF. And in this short video, if you stick with me to the end, I'm going to be showing you where and how you can take advantage of this opportunity. However, before I go on to analyze the GBPCHF, I'd like to quickly show us what happened on the card JPY pair we analyzed at the beginning of the week. And very quickly, without going into much more details, can see that this was where I asked us to buy card JPY, and for the past 16-20 hours, the card JPY pair has been raging upwards. So we could have opportunity to do the same with the GBPCHF if you patiently wait till the end of this particular video. So as is customary, I like to start my analysis on the monthly time frame, and on this time frame, I'm going to quickly draw my key zones. I'm going to quickly draw my key zones as well as get my directional bias. So unlike when I normally have the zones drawn before even starting the analysis, for this particular video, this is not the case, and this might give a lot of us who do not know how to draw the zones just the rare opportunity to do so. However, if you want to get an in-depth detail on how to do so, I also have a video on the channel dedicated to it. So those key zones are simply support and resistance zones where price has either been stopped from going downwards in the past or stopped from continuing upwards. So I'm going to be taking as few of those zones as possible, or rather those areas that are most recently relevant to our charts. And we can see that the chart on a much bigger scale shows us the zones. So like I said, are simply rejection zones. Can see that price are just areas where price had been rejected. Then the next thing excuse me, that we'll quickly do would be to get our directional bias. So our directional bias can get it by looking at the most recent candlesticks as well as the and more importantly the structure of the market. So if I'm to zoom this out, it is very obvious that the GBPCHF has been in a downtrend for a very long time. And what does that mean? It means that the market has been making lower lows and lower highs for a very long time. Hence, we have this downwards trending line to buttress our points. And because we're on the monthly time frame, I can as well zoom in to see what the most recent candlestick pattern has been like. So even without arguing, we can see that price came here to give us a lower high. We have a lower low, and price is pushing upwards. Now, the interesting thing about this particular pair is that price is also very close to our major resistance zone. So what do we do next? We go to the weekly time frame. On the weekly time frame, what we'll try to achieve on this time frame would be to get like a most recent chart pattern, candlestick chart pattern to work with. And how do we do this? We can look again at the structure of the market. You can see that this market has been in a strong bearish trend. So market came here, gave equal lows, gave us a lower high, a lower low, lower high. There's a lower low. And what we have here now, the sea of green candles is a retracement. So the next thing would be, how do we now get the most recent candlestick chart pattern? The easiest way first would be to come to this line graph. And the pattern before us is a simple M chart pattern where we have something like this, price making a retracement upwards, and then we're hoping that price can now what? Continue downwards. So I'm going to bring out this pattern for us to see so that we can have a quick explanation. So for the M chart pattern, I've explained this severally. So we have what we call the neckline of the M. So it is expected that price comes to do a retest of this neckline and then continues downwards. So you can see that we can easily compare this to what we have here, and this is already playing out. Price gave us an M chart pattern, and price is currently at the key zone of the pattern where we're expecting price towards to continue downwards. So on the weekly time frame, this is mainly what we try to achieve and then what we try to work with as we continue analyzing the market downwards. So let me take this out. So we'll come back to our candlestick charts, and then we can see, like I said, that price is currently at the key zone of this M chart pattern. So the question would now be, what do we do next? Also, another thing that's important here is that we should understand that when we're dealing with the M chart pattern, even though price is expected to come to this key zone and then continue downwards, price has the liberty to come all the way here to give us what? A triple top. So long as this part of the M pattern, this left or right shoulder of the M pattern is not taken out, the pattern remains valid. But however, if we look closely at this particular pattern, because remember we said that we have price at the key zone, we can also observe the candlesticks that the strong momentum with which buyers have been pushing price upwards has gradually started reducing with price at the key zone. Now what do I mean? When price got here, for 1 week sellers tried to push price down, buyers took control again, and in this current trading week we can see that we're having a dodgy candle forming, which is an indication that there's a struggle between sellers and buyers, and all the more an indication of a reduction in the buying momentum. So we can as well also add our trend line here before continuing down to the daily time frame. Now on the daily time frame, what we just discussed on the weekly time frame becomes clearer a bit. Now, how do I mean? First, we now have like a clear resistance zone here, especially for those of us that would have started our analysis from the daily time frame. So there are two possible scenarios here. Now, remember, trading is a game of probability. It's either price breaks this minor resistance zone that was seen, which is a key zone from the M pattern we saw on the weekly time frame, comes back here and pushes upwards, takes out the major resistance zone, then comes back here and then continues upwards. Now this would be the first scenario. Now the second scenario would be that price haven't gotten to this key zone, will have enough sellers coming into the market, and then price would push downwards and continue downwards. So in your own estimation, from what we've analyzed thus far, which do you think is most probable? If you ask me, I would say it will be the second scenario. Now, why would I even say the second scenario? From the daily time frame, we can see also that sellers are gradually gaining momentum in the market. So if I were to zoom in for us to see what's happening here, this is where a lot of people would have lost money already. Why? Because the market on this part of the chart has been making higher highs and higher lows. But if you look at the past 1, 2, 3, 4, 5, 6, 7, 8 days, 8 trading days, the market hasn't been going anywhere because it has been what? Ranging on the daily time frame. So like I'd always ask, how do we now take advantage of this setup to get that selling opportunity I talked about at the start of the video? So we'll go down to the one of the entry time frames, and that will be the 4-hour time frame. So like I always say, from the hourly down to the minute time frame, They are where you can look for your what opportunities. So now let's look at what's happening at this resistance zone. Remember, we drew this from the weekly, all the way from the weekly time frame. Now, one of the ways in which you could try to get into this market would be to add what I call the counter trend line. So a counter trend line is simply a trend line that goes in the opposite direction of your immediate trend. So we have the market, though retracing, was making higher highs and higher lows, and then at one instant, this counter trend line on the 4-hour time frame was clearly taken out. So we had sellers pushing price downwards. However, we also had buyers pushing price back to the what? The resistance zone, hence the range that we saw on the what? Daily time frame. But something interesting is currently happening here, and that's the fact that another way in which we can enter the market, which will be what? The presence of candlestick chart pattern, is playing out here, and that's the presence of what? A double top. So a double top is a strong bearish reversal chart pattern. What that means is that when price is going upwards, the appearance of this candlestick chart pattern indicates that there's a strong probability of price going or reversing and going what? Downward. So this would be a classic case of what? A double top, or equal highs, as some people would call it. So this would be our neckline. So once the neckline is taken out, we wait for a pullback, which could come here or come all the way up before price would what? Continue downwards. So that's exactly what we have on this 4-hour time frame. So let me mark it out for those of us who are still here to grasp what I am talking about. So if this would be what? The left shoulder, or the left part of the top, this would be the right part of the top, and then in this case, this would now be what? Our neckline. And we can see that price has been struggling at this neckline to completely take it out. So for clarity, we can go down to the 1-hour time frame. So on the 1-hour time frame, we can see that there's still a struggle to cleanly take out the stop. So the question, like I said, is when would I feel comfortable jumping into the trade? To jump into this trade, I'd have to wait for price to clearly take out this level. So if I have something like this, then I wait for the pullback here, and then I can jump into this trade. Like I said, it's an opportunity to sell this particular currency pair for a very, very long time. So I can have my stop loss here, just 23 pips. So imagine having to come into the market with a stop loss of 23 pips, and then of course my first take profit would be this this support level from the past. And because I swing trade, I can decide to hold this trade even all the way down to this level. So this would be like a massive risk to reward of almost 1 to 13. Like I always advise, you can always compare this analysis with your own. And I also always advise that as for trading, you need a lot of patience. So I would patiently be looking at this from time to time to see it play out in order for me to get a perfect entry or a near perfect entry into the market. Like I said, compare this with your analysis and monitor this from time to time and see how you can take advantage of it and not miss out of this particular opportunity. This is a trading academy, Oba FX Trading Academy. If you want to learn how to analyze the market like this, you can always reach out to us. And do not forget to like, share, and subscribe. Turn on your notifications for subsequent analytical videos like this. Cheers, and do enjoy the rest of your day.